I wanted to also ask about all the new index funds with a brain. Are those things really adding value?
No, probably not. The S&P 500 index fund is the one to use. That's the one I used in that bet I made for 10 years. It's the one I've told the trustee for my wife to put 90% of the funds I leave her into. The S&P 500 is, I don't know whether it's 80% of the market value of of everything you can buy in this country, and it's over. I think it's over 20 trillion. And you're buying America. And let me give you a figure that'll blow your mind. I think I bought my first stock when I was 11 years old. It was the first quarter of 1942, shortly after Pearl Harbor. I spent $114.75. Three shares, $114.75. If I put that 114 into the S&P 500 at that time and reinvested the dividends, think of a figure as to what it would be worth today.
Oh man!
Well, it's
okay.
I just want your audience to think for a second.
Okay.
The answer is about $400,000. So if I, as a little kid, had taken that $114 I'd saved on shoveling snow or whatever I'd done, $400,000 today, one person's lifetime. That's America. I mean, that isn't me. It is the huge tailwind the American economy gives to any equity investor. Now, the market's gone down many times during that time. People have panicked during that time. Headlines have been terrible. It looked like we were losing the war when we first bought it. But America is a powerful economic machine that since 1776 has worked, and it's going to keep working. Now, you don't want to buy to hold for a year. You don't want to buy with the idea that you could sell it in 2 years or 3 years, necessarily make money. You could lose money that way. But if you buy it for 10, 20, just keep buying the S&P 500 index and forget about all the other nonsense that's being sold to you, because I'll guarantee you one thing about the stuff being sold to you: it will carry bigger fees than what I'm talking about.
Yes.
Yeah.
And there's no reason to think that we don't know if it's 400,000, but that same sort of process or returns won't happen starting right now.
The S&P 500 companies have earned well over 10% on equity.
I think it's the same thing that makes most sense practically all of the time, and that is to consistently buy an S&P 500 low-cost index fund. Keep buying it through thick and thin, and especially through thin, because the temptation gets, when you see bad headlines in newspapers, maybe to say, well, maybe I should skip a year or something. Just keep buying it. American business is going to do fine over time. So you know the investment universe is going to do very well. The Dow Jones Industrial Average went from 66 to 11,497 in 1 century, and then since that century has ended, it's more or less doubled again. American business is going to do well. The trick is not to pick the right company; it's to be, because most people aren't equipped to do that, and plenty of times I make mistakes on that. The trick is to essentially buy all the big companies through the S&P 500, and to do it consistently, and to do it in a very, very low-cost way, because costs really matter in investments. If returns are going to be 7 or 8%, and you are paying 1% for fees, that makes an enormous difference in how much money you have on retirement.